Hello and welcome to Pro Trader Strategies Market Commentary for Monday, July the 27th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media. As I've talked about the economic data, the geopolitical environments, and how that impacts the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I go a little bit further and layer on top of it option strategies that I implement into my portfolio in order to increase that overall yield. I also am here to teach you guys these guidelines that I've come up with over my 25 years of trading options on how to streamline your process, pick the right strategy for that underlying. It's not just about your market assumption. It's about how we build these in order to increase our probabilities of success. So that's what I talk about in the webinars. I go into the nitty gritty, dig down deep into the underlying and what is going on around those options in order to find the right option strategy for you guys, and so that you can stay mechanical throughout all this. Without further ado, let's get on with the economic data then. Across the pond, it's a Monday. Not really a whole lot goes on Mondays, usually in form of economic data, but we do have some pretty decent economic data coming out of the United States. We got core durable goods, strips out transportation. So durable goods are something that are expected to last longer than 3 years, although I could say that maybe a computer or refrigerator doesn't seem to last much longer than 3 years anymore. But that's what's included in this overall economic data point. So excluding autos, 3.3% expected to be 3.5%, so slightly lower than expected. You throw in the cars, though, we got 7.3% expected to be 7%. So something is also coming out of all this. People are buying cars, and I've talked about this since the onset of all of this pandemic, is that people are going to kind of go away from ride share like Lyft and Uber and probably go out and look to buy their own car. Well, it's starting to show up in the economic data here. People are out buying cars, used cars. Inventories are really coming off quite rapidly. Also, something to note that we've talked about since the onset of this whole pandemic was the fact that people were probably going to go away from flying on airplanes and going to Airbnbs and hotels and staying there. And they're probably going to start flipping over to these travel trailers and fifth wheels and motorhomes. Motorhomes not doing as well as the travel trailer side of the aspect, but that's usually your entry level person. And that's what we are seeing is those are really moving. I think I heard up 14% or something year over year for those travel trailers and things of that nature that people are using to go camping, and they're ways to get away. So really seeing that market take off. All right, let's talk about the overall markets. We've got crude oil in slightly negative territory, but still holding on to 50, as I guess with the automobiles and everybody else going out there and traveling via the roadways, it's doing very well, and that may be enough to hold crude oil up into the 40 handle. Gold, check it out, new all-time highs. We've been talking about this happening as soon as we broke up in above that 1800 handle. It started looking like the shorts were going to be on their heels when we sustained that 1800 handle. Now 1941, almost 1942, blasting above the all-time high there, as you can see, up 36 points on the day as we speak in gold futures. So really pressing to the upside. Some people are calling for 20,000. I still don't think we're going to see 20,000 in gold, but fact of the matter is, weakening dollar, another round of stimulus coming down the pipe. It looks like that the dollar is going to get even weaker as we go forward. So that is a way to combat a weaker dollar is by buying gold. All right. Now bonds up about 10 ticks on the day. You know, we're right where we talked about it. You know, I don't really see us pressing above 183 handle. We're still a point and a half away from that right now. It could push above that, albeit slightly, but I don't know that we're going to see a dramatic move into the 190 handle like we saw before. I think that we're going to see some major resistance at around the 183 and between 183 and 177, which kind of lines up right here where our value areas kind of line up in a sense there. I do also expect to see the point of control for the volume to start shifting a little bit higher here as well. All right, VIX off a little bit as the broader markets are in positive territory. You can see the Dow Jones Industrial Average up 100 points on the day, kind of testing that 200-day moving average, and we're starting to see that 50-day come very close to the 200-day. And when we see that crossover, that becomes a more bullish long-term trend for the upside. But I do find that we are kind of going to start trending sideways here, maybe between 2,800 and I would say 2,800 and 2,600, maybe right where the point of control is here. So I think that we're going to see that continue. We might see a test if we see some more breakouts, which is what we are seeing, something to note. The Marlins, I think, we're starting to see baseball show up. No fans in the stadium, really. But the Marlins had like 14 players come down with COVID, and they have already canceled their games going forward. It looks like the Phillies in New York might cancel their games. So baseball might be over after just a couple of games over the weekend. So we're going to keep our eyes out for that. That starts shutting down. That's going to hurt industry as well. They're going to, there's a lot of businesses that rely on these baseball games in those areas in and around those stadiums for business. All right, so because people will go to those businesses. I've seen people showing up in Wrigleyville and watching games from the TVs there as well. All right, so Dow Jones up on the day nicely, but the one that is leading the way right now is the NASDAQ, and that's in terms of percentage points, I should say, or make that clear. Up 80 points on the day right now, but starting to stall a little bit. This morning was looking very strong coming into the day, and now we're starting to see a little bit more weakness, maybe because of the news coming out where baseball is probably going to be over before it really ever even began. All right, we've got the E-mini S&Ps up 13 points on the day. You can see the breakdown of the E-mini S&Ps flat overnight on the inventory, meaning nobody's long or nobody's really short. It's pretty even. But here's the move that we made on that economic data point, which was the durable goods orders that started giving us some strength coming into today's session. And now a lot of news coming out, not making this look so rosy. So I haven't done anything with my portfolio because I am looking to trade earnings. One thing I'm not going to trade is Boeing. They come out in the morning with their earnings. I'm sure it is going to be like a funeral procession listening to these guys talk about how their headwinds are really a pain point here going forward. And then we also have Starbucks coming out with their earnings, and I'm not too sure if I'm going to trade this one at this point or not. We do have a lot of earnings coming out this week, so I'm going to leave cash on the sidelines to get ready for all of these earnings that we have coming out, because we have some big names that I want to be able to participate in. All right, so that's all I've got for you guys. Check out this week's webinar. It is on the poor man's covered call. If you are strapped for cash, this might be an option strategy that you can implement into your portfolio so you can take advantage of some of the upside in these underlying. So check it out at protraderstrategies.com. I'll show you how to build that strategy out to increase your probabilities of success going forward. That's all I got, other than if you can't take that, take it easy.